So the UK goes into this budget facing an identity crisis, high taxes, slow growth, overstretched public services, and a population that just feels unheard. Taxes are at a 70-year high. Income tax, national insurance, and corporation tax have all climbed. The average worker now feels poorer every single year. Taxes have risen over the last few years. The landlords have basically been attacked with Section 24. Income tax bans basically have been frozen, and it's looking like in this budget they're going to be extended. I believe at the moment they're until 2027, but they're going to be extended further on to generate more tax revenue as well. But at the same time, everything's getting more expensive, and people do not have enough money in their pockets to have a decent standard of living in the UK anymore. So why is the UK's fiscal black hole so large, and how is QT making it worse? So the government is facing a significant gap in public finances. The black hole is not a result of one single problem, but the consequence of several years, several pressures converging at the same moment. Understanding these pressures is essential when considering the options available in the upcoming autumn budget. So, the cost of servicing the national debt has surged. That's one of the largest drivers of the fiscal gap that Rachel Reeves is going to be facing in the autumn budget. So there's such a large amount of UK government debt. For over a decade, the UK has borrowed heavily at extremely low, near zero interest rates. During the quantitative easing era from 2008, 2009 onwards up to COVID, this debt must be refinanced several times higher each time a gilt matures. The Treasury issues new gilts to repay it, but at the current yields, the cost of refinancing is materially higher. So debt interest has now become one of the single largest items in government spending. It is competing with major public services budgets that we have, such as policing, such as the NHS. The rise of this interest cost is structural. Even inflation falls, the legacy refinancing QT era debt will continue to weigh on public finances for years, making public services much less quality. QT is forcing the Treasury to refinance at the worst possible time. They've lost billions already with the sales of these securities. Tightening shrinks the balance sheet at the Bank of England, but the mechanism used to do this places a direct strain on public finances. So during QE, the bank purchased roughly 875 billion of gilts at high prices. Now, during the more recent QT era, two things are happening simultaneously. So, when gilts held by the Bank of England mature, the Treasury must repay them in full. This is a major change from QE. Instead of the bank rolling the debt over, the Treasury must issue new gilts to the market at today's higher yields. Each maturity becomes an expensive refinancing event. Now, compare this with active QT. So active QT realises losses for the bank and the taxpayer. and they must cover them. And it's not them that covers them, it's actually us that covers them. The Bank of England selling gilts back onto the market, they originally bought at much lower yields and much higher prices. Selling them today often means crystallising losses, and they've been selling them and losing billions of pounds over the last year or so. Under the QE indemnity, these losses must stay with the Bank of England. They are reimbursed by the Treasury. Every loss requires additional borrowing. This dynamic is one of the largest hidden contributors to the fiscal black hole we're facing in this autumn budget. In effect, QT is tightening financial conditions and widening the deficit without Parliament ever voting for it. So slow growth and stagnant tax revenue amplify pressures. The UK is growing slowly by international standards. That means weaker growth, weaker tax receipts, while higher interest costs and higher welfare spending push up this expenditure. So this combination hardwires a deficit into the system at a time borrowing costs are rising. So basically the result of this is a fiscal position that deteriorates even without new spending commitments. Higher gilt yields feed through to the whole economy. Rising yields affect more than government's refinancing. They influence mortgage rates. They influence company financing. They influence local government budgets, pension fund valuations, market expectations of the base rate. As quantitative tightening increases, the supply of gilts pushes up yields and spills over and tightens financial conditions across the entire economy. This further depresses growth and feeds back into the fiscal problem that we are facing, making the black hole larger than it would otherwise be. So does the government have any alternatives here? There are these three broad options to the Chancellor Rachel Reeves. Option one would be, which is looking at raising taxes and cutting spending. This is the traditional way to close a fiscal gap, but politically extremely difficult because it's going to create a massive backlash. Option two, issue more gilts and accept higher borrowing costs. So by doing this, issuing gilts to fill the hole would add supply to the market. Plus, higher yields worsen the problem. The government would be trying to borrow its way out of a debt servicing crisis. So option three would be to coordinate with the Bank of England to manage QT. This is the most realistic path. Slowing or pausing active QT would reduce gilt supply, stabilise yields and ease refinancing costs. So it would reduce the size of the fiscal hole without resorting to large tax rises. A full return to QE is unlikely while inflation remains a concern, but a controlled adjustment to QT, slowing sales or prioritising market stability is credible and would mean materially improve the fiscal position. So global context, United States at the moment is stopping their QT program on the 1st of December. The Federal Reserve has confirmed it will end its balance sheet runoff on the 1st of December, shifting from QT to balance sheet maintenance. This matters because the Fed is signaling that tightening liquidity too far risks destabilizing markets. So that's going to be a positive thing for crypto. It's going to be a positive thing for the stock market when more liquidity is effectively in the system because less is being drained out of it. The UK is not operating in isolation. Global liquidity matters, and central bank policy is becoming a central tool for managing borrowing costs globally. So just to summarise, this fiscal black hole Rachel Reeves is facing, there are ways of reducing QT to get a bit more liquidity into the system. It comes at the costs of potentially high yields, but QT is playing a far larger issue on public services due to the quantitative easing that has happened over the years since 2008. And the thing is, taking a stance of a strong QT era that we have done over the last few years since effectively COVID around 2022, this has had an impact on the growth of the economy. We also have to look at the massive government debt interest payments which are eating into this budget. This means there's less spending on services and more pressure to raise taxes. So after 2008 to 2009 financial crisis, we started the program of quantitative easing. That effectively means that the Bank of England buys UK gilts, UK government debt, and in turn it injects liquidity into the system. Now, when these government bonds basically mature, they need to be rolled over. So they need to refinance their borrowing costs basically. So in turn it means that every few years since 2008 to 2009, these government debts basically need to be refinanced. So the issue that we are facing now is the financing costs are much higher than they were basically back in 2000 to say 2022. Now interest rates have gone up, refinancing costs are weighing much more heavily on the debt burden of the country, and unfortunately these higher government borrowing costs are being pushed over to us, and in turn it means that taxes are being raised to pay these interest payments and public service quality is going down. And that's why Rachel Reeves is going to be doing a disastrous budget, and we're not sure how bad it's going to be, but it's certainly not going to be good. It's either going to be bad, very bad, or completely disastrous, attacking landlords, attacking working people, even though the pledge was not to increase personal income tax. There's a chance that this is going to happen. There's going to be talking about wealth taxes as well, and that's why you see so many millionaires and billionaires leaving the UK, because why would they want to stay here when they can move abroad and not have to face these kind of costs? So when the Bank of England unwinds QT, it isn't just shrinking its balance sheet, it's quietly pushing up government's borrowing costs and creating huge losses in the process, and that's the problem that we're facing at the moment. So the bank has been doing two types of quantitative tightening. First, it lets old bonds mature and simply doesn't replace them. Second, it actively sells gilt back into the market. And here's the problem. Most of these bonds were bought during QE years where yields were near zero. We had zero interest rates. And selling them today at much higher yields and much lower prices. And that means losses, and not just little losses, big ones. So these losses don't just stay at the Bank of England, they ultimately fall on the taxpayer, you and me. Because the bank is selling so many gilts back into the market, roughly I think it's about 100 billion a year at the moment at these current amounts, this directly feeds into the base rate environment. So mortgage costs, business costs, and the costs of servicing national debt are much higher. QT is a lot more than balance sheet normalisation. It's tightening financial conditions across the entire economy, and this is a problem for risk on assets such as crypto, such as tech stocks, such as shares. Gilt yields heavily influence mortgage rates, company borrowing, and government debt refinancing. Swap rates, the Bank of England base rate, the path that the market expects for that. So QT tightens financial conditions even without raising the base rate. So investors demand a higher return basically. When the Bank of England was buying during its QE era, investors were crowded out and forced down the risk curve. Now the Bank of England is doing the complete opposite, pushing investors up the curve again. So investors demand higher returns across all assets. The link to the Bank of England base rate, the interest rate. Quantitative tightening influences the base rate indirectly. It hires gilt yields and signs tighter financial conditions. Tighter conditions in the market reduces the need for higher base rates, but QT also pushes the market to expect higher rates of inflation risk, and that's the issue we're facing. When the Bank of England sells gilts at a loss, the Treasury must cover the losses. That increases government borrowing needs, which increases gilt issuance, which in turn pushes yields even higher. This can make the market price future base rate even higher. The Bank of England doesn't ultimately raise them immediately. Next, we'll look at why QT increases massive QE losses. Now, QE was done from the 2008 and 2009 financial crisis. It was done to inject liquidity into the system to give a false sense of security to the markets so that they can increase growth, they can get out of the financial credit crunch that we were in after 2008. It was something that Japan did in the 90s, and it had a very detrimental effect on the Japanese economy. The Japanese economy has been in stagflation for a number of years, basically with low growth, low productivity. It has really been a damning effect on the Japanese economy over the years, but we in the UK decided to implement that. A lot of governments across the West, the US, basically implemented quantitative easing, which is basically purchasing government debt and putting it on in this case, Bank of England's balance sheet. It purchased around 875 billion pounds worth of these securities. They're government, they're called gilts, which is basically effectively the Bank of England is purchasing government debt so that the government has money to spend on public services and to meet its obligations. Now, over the years, QE that is the reason why there's government borrowing costs and why taxpayers like yourself and I have to fit the bill for these interest payments. And these interest payments have been rolling over basically in the last 10 to 15 years. So after COVID, due to inflation becoming rampant, the Bank of England increased the base rate, increased interest rates, and started a process of quantitative tightening. Now, quantitative tightening is the opposite of quantitative easing. It's effectively taking money back out of the system that it had previously injected as liquidity. So this process of quantitative tightening has various mechanisms and consequences of reducing the liquidity in the system. So over the last couple of years, the Bank of England has been selling these gilts back to the market at much lower prices than it originally purchased them when they started the process of QE back in around 2010. These losses are effectively losses that we have to cover. And when we talk about Rachel Reeves having a 40 billion black hole in public finances, this is partly a consequence of why there's such a black hole in the system. Now you said this is the part that the public rarely hears about in the news. During QE, the Bank of England bought gilts at very high prices and very low yields. Now during QT, they're selling many of these at much lower prices because the yields have risen sharply. So every pound lost by the Bank of England is reimbursed by the Treasury, meaning you and I has to fit the bill for these losses, unfortunately. The Bank of England is expected to lose hundreds of billions over the total unwind of QE. And that's another reason why QE is such a detrimental factor in this equation. Ultimately as well, the government isn't very efficient in the projects and spending it undertakes. The country needs more targeted spending, not political vanity. A lot of the public services in the country have very inefficient processes. Different teams, different councils don't communicate well with each other. There is a lack of quality in certain positions in the public sector. There's a lot of public sector workers who don't have the quality to do those positions. Why doesn't the government make a more focused schooling system where different professions basically at a young age have quality training? Every job that is undertaken in the public sector, everyone that the government effectively employs should have a level of competence and quality to be able to do the job, just like that happens in the private sector. So why isn't there better apprenticeships? Why isn't there better schooling, rather than focusing on subjects that really you aren't going to use in the future and you're not going to use in everyday life, but focusing at a younger age certain professions and certain areas of the public sector so that the quality and efficiency will massively increase. So a lot of people criticise Liz Truss for her mini budget in 2022. However, I think a lot of her policies were actually very sound policies. Ultimately, it was probably done, all those policies were done in too sharp a moment, but I think over time, those policies where you want to increase productivity, increase spending, lower taxes, these are all things that can actually get the UK to prosper and start getting back to a competitive level internationally. However, by raising taxes and stifling growth and innovation and stifling productivity is very detrimental to the country, and it's not in the direction that I think we need to be going in to get out of the problems that we have been facing over the last few years. So a big shout out to Liz Truss. I think I think her policies were sound, and I think she should have been given more of a chance to implement those policies, but unfortunately it wasn't to be. The current UK government clearly is failing. Starmer is losing respect from all angles, and I think we need something new in this country. I think we need Nigel Farage to come in and make some serious changes, and I think Reform are the party to do that. But we'll have to see how things pan out over the next 12 to 18 months and see if there can be any major changes to the UK government. So what are the potential policy changes that could happen in the 2026 autumn budget? So they could raise income taxes. The government may extend the threshold from I think 2027 onwards, which means stealth tax rises for middle earners, investors getting squeezed through take-home pay and potentially higher dividends tax. Possible changes to employee or employer national insurance rates, hits take-home pay for households and payroll costs for businesses. Governments often use national insurance contributions because it looks like the businesses are actually paying, but it affects everyone. And then there's VAT. You could see a wider VAT base or even a rate increase. This pushes up consumer prices and hits service sectors. VAT on private education has been openly debated as well. So corporation tax, business allowances, the capital gains tax rate may stay the same, but allowances could be tightened. This reduces after-tax profits for companies, smaller businesses, and smaller businesses who desperately need their taxes to stay low to stay in business. Capital gains tax is a big risk that these rates could be pushed up closer to the income tax rates. Allowances could be reduced again. This requires people to sell before the budget to lock in current rates. So again, manipulating market conditions, which is often problematic. There's talk of the inheritance tax. These thresholds may be frozen. Business property relief or AIM relief could also tighten, affecting wealthy estates. So there's also possible changes to the ISAs, putting a cap on the cash ISAs, which effectively pushes more people to invest in stocks and shares ISAs when they may not have previously wanted to do that. They are some of the things that could be done. There's also talk of the pension lifetime allowance. It's already been reworked previously, but the budget could change the limits. And then there's property. There's options on the table for higher stamp duty land tax, surcharges for investors on second homes, council tax revaluations, so the people with more expensive properties could face much higher costs, such as the mansion tax. Landlords and high value homeowners would feel it directly. There's the non-dom and residence rules further tightening likely impacts international high net worth individuals. London property demand and talent could be leaving the UK. There's already been many high net worth individuals that have left. There's fuel duty, possible rises to tobacco, alcohol, new road pricing pilots. This hits logistics, travel and lower income households the most. What else could there be? Other possible changes in the autumn budget. Business rates could also go up, another round of revaluations for targeted reliefs. High street retail could get affected even further, warehouses may pay more. And then there's welfare and benefits, adjustments to universal credit tapers, uprating formulas, work incentive tweaks. This can affect household budgets and the labour supply. So income tax and national insurance freezes, lower real take-home pay, property investors less spare cash for refurbishments or void periods, which means they will leave the market. Bond investors, there could be possible moves towards gilts as people get cautious. Crypto investors, lower dollar cost averaging flows. There's also talk of changes to VAT. Households will get passed on those costs. Landlords, higher operating costs if VAT needs to be pushed onto them. Equities, consumer facing companies squeeze. Gilts, lower demand, may call inflation later off. Crypto, short-term risk off issues. So it could be higher capital gains or lower allowances, potentially taxes for landlords. There's talk of changes to the stamp duty land tax, where you pay a percentage fee every year for holding a property. So it's going to reduce the want for landlords to even get into the market, because the taxation is so bad. Even after Section 24, a lot of landlords have left, and now it can get even worse. So on an investment point of view, if you invest in buy-to-let properties, this is going to be a really bad one, especially with the renters reform bill that's coming in shortly as well, which is going to crash the market even further. They're either looking at little small ways of getting that tax revenue in, or they're going to do some major ones like the income tax. They can't do too much to wealth taxes is another big debate, but ultimately for the wealthy, for the millionaires, for the billionaires, they can leave the country, and many of them are leaving the country, and when that happens they contribute a massive amount to the level of tax revenue that comes in. If these people are leaving the country, it stifles, it basically means that it stifles innovation for a start, but it also means that the people that can't afford to pay the tax as much are going to have to fit the bill for it. So it's going to diminish the quality of life for the everyday person in the UK as well. And not to mention these wealthy individuals that do leave the country, they're the very people that invest in startups. They're the very people that invest in the country to help it to grow. So with these people leaving the country, it's going to be highly detrimental, and it just will impact on the continued decline of the UK and the UK economy. So what does this mean for the country? The UK can't tax its way to growth. Productivity is flat. businesses are leaving, families are squeezed, and for the first time in decades, the UK feels like it's losing confidence in its own identity. What should the budget do? It should cut taxes for workers, for working people, so they have more spending power. The middle class is being hollowed out completely. The wealth inequality is massively increasing. You need to incentivize investment. Instead of raising corporation tax to 25%, it should be lowering it back down to 19% to boost business relief and make the UK more competitive again. Take pressure off public services. So migration must be sustainable and tied strictly to economic contribution. So all of these migrant hotels should not be happening in the UK. Us as taxpayers, we have to fund those migrant hotels. We didn't vote for them. We didn't vote for spending to be on those levels, and they get a lot of money spent on them, and quite frankly they don't really integrate well into society either. There's been many reports of problems around the migrant hotels, lots of protests. Ultimately, we shouldn't be having to fit the bill for migrants staying in hotels. That's another massive contributing factor to why we've got this fiscal black hole and why the budget is going to be so disastrous to fund these things. High taxes, slow growth, overstretched public services, and a population that feels unheard. It's really not good. The core problems that we are facing. The taxes are at a record 70-year high. Income tax, national insurance and corporation tax have all climbed. The average worker feels poorer every single year. Unsustainable migration levels are not a cultural argument, but an economic one. Public services are designed for 60 million people. They can't cope with 70 plus million. The system breaks when more people take out than put in. Now you see, the issue is you have people coming over to the UK to use free NHS services, which may seem like a noble act, but the issue is someone has to fit the bill for these, someone has to pay for them. And while things like that are being allowed to happen, it's effectively the government expecting us to pay for anyone who wants to come over and use the free service. And it's not fair, and two, it's unsustainable. You can't expect one population basically to pay for any other population in the entire world. It's not feasible, and it's another reason why the NHS is so overstretched and the quality of service is massively diminishing. So why does this budget really matter? Either the government chooses growth, or it keeps the country stuck in its stagnant state. Either it rebuilds confidence, or it continues its inevitable decline. Either it reforms the system, or it lets it drift towards long-term stagnation. This budget is more than just numbers. It's a chance to restore stability, rebuild trust, and give the UK a future that works for the people, the very people who actually fund it. However, it doesn't look like this is going to be a particularly good budget. In fact, quite the contrary, this is most likely going to be one of the most disastrous budgets in recent history. Thank you for watching my pre-budget video. I hope it's been helpful. If you do like the content, please follow me, follow Nexus Investor, follow the Instagram and TikTok channels that I have as well. Thank you very much for watching.